let's talk about the most simple yet profitable trading strategy you can use in the market pretty much straight away. The strategy I'm about to share with you can be applied to the stock market, the options market, and even the futures market. Throughout this video, I'll be sharing the exact entry details, the exact exit details, and I'll also be letting you know how this strategy performed over the past 2+ decades worth of market data. Before we get into all the good stuff, if you don't know who I am, my name is Matt, and I'm a degenerate trader. I love trading stocks, options, futures, crypto, and pretty much everything else in between. My background is computer science with a little bit of statistics, so this type of data research is up my alley, and I love creating content and sharing it with all of you. If this is something that you enjoy, don't forget to like and comment and subscribe if you're interested in getting more of this in the future. Now that we got that out of the way, let's rock. Very quickly, just a little bit of house cleaning. For the purpose of this video, when I was doing the back testing and all the research, I was using the S&P 500 futures contract and the NASDAQ 100 futures contract. In terms of the time frame, I was using the daily chart, and I started at the beginning in 2000 and I ran it all the way up to halfway through 2023. So basically just over 23 years worth of data. I'm bringing this up because I wanted you to know that I used a pretty large data set. I didn't cherry pick data here and there just to make a point. It was over 2 decades worth of thorough data, cutting nothing out. And I also want you to know that I'm using the futures contract, but feel free to leverage it however you want. If you want to use options contracts, hey, have at it. If you want to use equities, hey, have at it. Whatever you choose to do with this information, it's all up to you, and I wish you the best of luck. And now that we got all that nerdy stuff out of the way, it's time for us to get into the meat of the video. As I mentioned before, when I was doing the research for the best day of the week video, I noticed something a little interesting. When you're considering the S&P 500 or even the NASDAQ 100, and you buy it open and sell it close every single Tuesday, there's not much of an edge. That's pretty much a fancy way of saying when you buy it open and sell it close every single Tuesday for the overall market, it's pretty much flipping a quarter. Half the time it's bullish, half the time it's bearish, and the average net gain and the average net loss effectively cancel each other out. But when you consider, once again, the S&P 500 or the NASDAQ 100, and you buy at Monday's close and then sell at Tuesday's close, so basically you're holding for one night session and then one full day session, Monday's close to Tuesday's close, all of a sudden it becomes a profitable trade. On the screen now are the results of buying on Monday's close, aka going long, and then selling on Tuesday's close, aka closing out the position for the S&P 500 over the past 2+ decades. If you were to have traded this exactly, you'd be up just below $78,000 with a profit factor of 1.21. Very quickly, if you don't know what profit factor is, it's simply the ratio of gross profit versus gross loss. When you do the exact same thing on the NASDAQ 100, the numbers get even better. The total net profit is $85,000, the profit factor is 1.18, the accuracy jumps up to 54%, and the average net trade is $77. So what in the world does this tell us? It's actually pretty simple. For whatever reason, there's a bullish edge, as in it's advantageous to be a bull, as in it's profitable to be a bull between Monday market close and Tuesday market close. Now, this is probably the point in the video where you're wondering, why does this edge even exist? And unfortunately, I have no clue. Of course, I have some thoughts, opinions, and theories, but I don't know if they're right. In all reality, the only thing that matters is the fact that the edge does exist because that's how we make money. Speaking of making money, hey, the video is not over. Look down. Look at the length of this video. I'm not just gonna leave you there with buy at Monday's market close, sell at Tuesday's market close. Of course, we can make improvements on it where we can make more money and ideally take on even less risk with a couple tweaks to the strategy. So I have 2 different ideas for you that considerably improve the numbers, but before we get into those, as a quick reminder, I'm not your mom. Do whatever you want with this information. I wish you the best of luck, but maybe be a little responsible with it. Alrighty, improvement number 1. We're still buying at Monday's market close and we're still selling at Tuesday's market close, but now we're not doing that every single Tuesday. We're only doing it if Monday is a red day, as in Monday's close is below Monday's open, as in a red bar. Right away, the results for the S&P 500 backtest improve considerably with this small little tweak. The total net profit is now $109,000. The profit factor is 1.72. The accuracy is above 57%, and the average net trade is over $215. Similar improved results were also seen in the NASDAQ 100. The new total net profit is $84,000. The profit factor is 1.41, the accuracy is 53.6%, and the average net trade is just below $175. In both situations, we're now trading less but making more in terms of total magnitude, and the average net trade also increased, and we had higher accuracy. So basically across the board, all the major metrics did improve. But wait, your boy's going Billy Mays mode because there's more. Let's talk about improvement numero dos. At this point, we're buying on Monday's market close and selling on Tuesday's market close if and only if Monday is a red day. Now, let's take that one step further by saying not only is Monday a red day, but it needs to drop in excess of 1%. So to be clear here, we're basically doing the same thing, but this time around, we're looking for a bloody red Monday. You should probably think of your favorite horror movie and then apply that to a stock market and imagine it playing out on Monday. That's pretty much what we're looking for. Here are the results when you apply the Bloody Monday criteria to the S&P 500. The total net profit drops to 61.1 thousand, but this is because it trades a lot less. The profit factor jumps up above 2, and the accuracy is just below 60% with an average net trade of over $400. The backtest results are even more jaw-dropping when you apply the same situation, but this time to the Nasdaq 100. The total net profit jumps up over 100,000 on a profit factor of 2.26 with an accuracy just below 59% and an average net trade of roughly $575. So there you have it. That is the easiest trading strategy in the entire market. Buying at Monday's market close and then selling at Tuesday's market close. Obviously, you can improve it by making sure that Monday is red, and then you can really improve it by making sure that Monday is bloody red. I'm pretty confident that you know this, but I'm just going to say it anyway to be safe. Obviously, these numbers would change based on the underlying asset that you're using and also the product that you're using, such as stocks versus options versus future. So I just want to get that out there. And you should also know, just because we've seen something play out historically, that's by no means a guarantee that it will play out in the future. But it does remind me of an old market saying, the market doesn't repeat, but it often rhymes. So with that being said, I hope you enjoyed the video. If you did, let me know by hitting the like button. And if you want me to make more content like this, where I share strategies and the numbers and statistics supporting them, let me know in a comment below. I appreciate your time. I'll catch you in the next one.